All right, welcome. Yesterday we had our PUG meeting. Several people were asking for the strategies and the settings in the Algo17 program. For those that do not know what the Algo17 program is, it's a optimization function we built using the TradeStation platform, and it allows clients to optimize, reprogram, and update or maintain a trading strategy. Trading strategies can be built on buy, sell, long only, short only combination. We have high close, low close dojis, and we've broken down risk reward ratios for each buy versus sells separately, since again, markets move differently going up than they do going down. George had asked for what we're doing in the British pound because over the last few months, the euro currency had a very narrow contracted range, and we switched over to the British pound through the whole process with Brexit and all of that discussion in 2019. In the live trading room, the model that we've used is one that has had flat performance. This is the continuation, but all of a sudden we went from 0 to 1,000 pretty much in as far as ATR, that's average true range, and the British pound, no exception with all the other markets, did as well. This is the performance graph, the summary of the program that's currently running in the room. So what do we do when we're running in the room? Well, these signals are generated live in front of everybody, and they can come in and they can piggyback these trades. They can look at a few things that are occurring. The signal in the live trading room has a little like an Excel spreadsheet, so to speak, and it shows, it's called the Trade Managers tab. It tells you what the product is. It tells you everything that's even on the chart that you see. So this shows that we got two contracts, which generally we have only two contracts working on futures in our programs. The red line here is the initial stop. The blue line is the initial intended target. I'll get more on that later. The orange line is an emergency stop, and then these gray lines that you see are a trailing stop function. This particular model does not get out at its intended profit target. This would be a risk-reward ratio calculation that was figured out. You have three choices of what to do when you're short or optimize, or actually you can override. 1, get out of the position at the intended profit. 2, scale out of 50% of your position at your intended profit and then trail the balance. Or the third one is don't get out of any position, just trail the stop till it gets out, or a new trade reverses the program. As I was talking, I believe you just saw that this is a max bar, and this has also a maximum holding period. So this is the British pound model. This is, again, if this is your short, blue lines indicate profitable trade, red lines indicate losing trades. What are the settings? So let's get into that. So first on TradeStation, just you can go to studies and edit strategies. Now I'm not going to go into complete detail. You can just pause this and go through the numbers yourself and figure and just do the inputs if that's what you were interested, for all of those that have this program. So the Algo17, you can see it's the latest and greatest version, up to date. It's 17 Xtreme version 2. It's the 18th release. So we keep coming up with updates just like any other software program would. So when you go into customize, this is the start time, add minutes to start time. That's 285 minutes added to 4 a.m. So 60 minutes, you figure that's around just roughly around 8:30. 260 and 25 minutes. So 260 is 4 hours. That's 8:25. Now I could just change that and go 8:25, but this is another function that allows us to optimize when's the best time to start. Is it 3 in the morning, 4 in the morning, 5 in the morning? Well, for most part, when we're in a live trading room, we're not taking trades at 3 in the morning. The live trading room opens at 9 a.m. So if we have a model that's great, but it's only great during 3 a.m. to 6 a.m., it doesn't serve traders well that come into the live trading room. This is end time. If you notice, it says subtract minutes from end time. That's 100 minutes, 60 minutes per hour. If 1600 is 4 o'clock, you're roughly, as you can see, the 100 minutes minus 1600. All right, exits end of day. So if it doesn't kick out, it's getting out at the end of the day. What's defined as end of the day? We defined and built in a program to account for the Globex close so that you can't get out of something when it finally closes. You have to get out before it closes. So we re-evaluated and changed the code for what end of day is. And again, that's proprietary for owners of the Algo 17. Next, we built in position sizing. This is calculation method number 3. One is monetary. 2, setting number. If you switch this to 1, you'd say get me in as many positions as possible as 100,000 will allow. This is better for using stocks and ETFs. Number 2 would say get me into as many positions as the trade risks allows, with only $1,000 max trade risk per trade. Okay, so that's what we would be looking at there. All right, now, what do we got? So we got the number 3 setting is 2 lots. All right, now risk management. Here you go. Max trade loss. On the British pound in this environment with an ATR, and that's one thing that everyone has to understand. We're sitting here in a 10-day average true range at historic biblical proportions for a lot of currencies. So when you look at max trade loss, this is the number 750. Max profit, it's almost one and the same. And again, both these numbers can be optimized. They're overridden now because the market has trailing stop functions in. The settings for trailing stop, when it gets this function here, again, 45%, 20, and it does not scale out, it just trails the stop. This optimized out because the market was in a trailing mode, it trails the stop. What kind of stop? It uses a combination of the dynamic exit. The dynamic exit is a function of our last conditional change, more proprietary work, and that's what the gray line represents. And then we have a compression exit, which is a combination of last conditional change, ATR, and a time factor. And this will not kick in until you get to a level of 10 ATRs. Now, that's not daily ATRs, it's a 5-minute ATR. A little sophisticated, real easy to understand with the right training. But needless to say, it adds 10 ticks above and beyond the stop to help from market gyrations. Again, that's a function that can also be optimized. So you can actually customize that optimization function. I'm going to cancel that. Oops, just got rid of it by accident. Hold on a minute. All right, we're back to where we started. All right, so once again, trade signals. It does take reverse signals. Obviously, it was short, it reversed, and went long. It has a 1.45 risk-reward ratio on a long. It uses a confirmation of a 5-period moving average based on the highs, high, low, close. And that's another optimizable function. Should you be taking a PPS buy signal, any PPS, or should you be using a filtered moving average function? And if so, what kind of moving average? Moving average of the close or moving average of the high? In this case, it optimized out as a moving average of the highs of 5-period. Now, for those that don't have this program, that might be something for you to explore. What's the difference between a moving average of highs, lows, closes, and pivots, which is the high-low close divided by 3, all right? We also have a function of an added last conditional change. So it filters out what is last conditional change. It's part of my research work that we wrote about in a book 20 years ago, and eventually that second edition will be out on the store books, on the store shelves. Next, sell signals. It has almost a very similar risk-reward ratio, 1.37, but in this case, it wants to use a 14-period moving average of the close to trigger a short. So it's very stringent in its filtering mechanism of when does it take a short. Now, once again, this is a 5-minute day trade model, friends. This is not a swing trade model. This is not an end of day where you could do a 100-year historic backtest study, because it's a 5-minute day trade program. More importantly, you just saw it only takes trades during these time frames. Again, can you trade your own and build your own system? Yes, but the particular individual asked me for these settings that are in the live trading room, and I wanted to get it. Now here's the holding period, and you can see what max bars means. If you count from here to there, it was 33 bars. Again, another function of being able to optimize what is your best holding period for letting winning trades ride. We also have an entry confirmation. Should we get in when there's a signal at a market order, true or false? And this case, no. When it generates a buy signal, it just doesn't go and send a market order in. It places a stop above the signal bar. So if it's a buy, it needs to make a positive reaction to the upside. It helps filter out bad trades. So for example, over here in the sell, you can see the arrow went short down here. It didn't go short. The trigger bar did not go short on the close or the open. It got stopped in, or at least followed through momentum. And then it can, in this case, it was probably there was a couple ticks slippage right there. All right, and draw lines, just true, false. False, 0, true. So 1, true. It draws lines that you can say, where's my profit target? So that's our British pound. Thank you, George. Hope that helped you out. If you notice here, just the opposite of the sells, here's the buy. Here was the entry. There's the initial stop right there. This was the intended profit target. If it doesn't get near the profit target, it trails stops. What are the stops? You can see everything's drawn. Here are the gray lines right there. Those are the trailing stop functions, number 1. Number 2, here's an emergency stop that kicks in case the trailing stop is too low. It has a emergency stop function kicked in. So if it doesn't quite get to the profit target, it's got protective stops underneath it. And that's how this program has worked. All right, next, let's get on to the ES real quick. All right, here's our ES. And again, we went from an average 5-year, and I don't know if a lot of people realize this, but why do trading systems go bad? By the time you build one, by the time you trade it, and you're comfortable with it, the dynamics of the markets change. Either the time of day money flow comes in is changed. Maybe there's overnight action in the European session. You come into the day session and it just does nothing for the first couple hours and chops around and just kills people. Or you start to see expansion in volatility or daily ranges. The average 5-year prior to 2018, the average daily ATR was around 28 points in the S&P 500. Now we're having 28 points like every 10 minutes. So we did go up, for your education, many people may not know this, but we had in March a 252 point 10-day ATR reading. That means the S&P 500 futures were moving 250 points in a 10-day period. I mean, that is just absurd. Now currently it is April 16th and we're at 120 point ATR. I don't know if you guys remember this, but back in December of 2018, when the market crashed back then, we hit an intra-week 10-day ATR of 96 points. I mean, gosh, we are higher and falling right now, so that's the good news. I mean, we're falling, but we're still at historic levels, like 400% above what the 5-year average is for markets that trade intraday. Okay, so you better be selective. And now, again, this is a system that's we've had up and running, and I optimize this to account for an insane period of volatility. If you take a look at some of the numbers, I mean, our gross profits are pretty good. Percent profitable is not that great, but that's because the trades that it's in. And we will change this setting. So let me make sure that you're 100% crystal clear in what I'm saying. This model is built for high ATR environment. We will have to change or re-optimize when we get back into a more realistic, normalized ATR environment. A normalized ATR environment would be something like in the realm of like we get back into 40 points daily, or we get back into, like, again, 30-point ATRs, and that's when we can change things. If you're interested in the signals that we have right now, these are the settings, and I'll go through that right now for you. Again, Start time 6:15, add 45 minutes. Let me do it a different way because it's a little easier to read when we go through our study page and edit strategy page. All right, once again, 17, version 2, 18, everything's check. All right, great. 6:15, add 45 minutes. Now we're what does that make you? 7 a.m. Local time. Now, this is a number that can change and should change, but we're seeing better trade strategy setups during, right before when the live trade room is open. It stops trading at 340. It won't take any new trades after 340. Exits everything end of day. Position size 3, 2 lots, $1,000 risk. Again, you would think, oh, I can't trade that. Well, you're probably right, because that's what the environment is for the Emini S&Ps right now. You could build a 30-second model, but I mean, in this period, I don't see us lasting in a high ATR environment past maybe the middle of Q2, which we're getting close to by probably first week, second week of May. All right, I think we're going to start to see contraction of ranges as we move through a period of understanding when the economy is coming back alive, not just here, but also abroad in Europe and as well as Canada and Latin America. All right, and as throw in the Middle East as well, Israel, the Iran, Iraq. I mean, it's everywhere. Every economy around the globe shut down. People may not realize that. So, jokingly, Moses saved his people, the Jewish people, from the pharaohs. And so now everyone's wondering if Netanyahu is going to save the Israelis from COVID-19 and let them out of bondage right now, because everyone is held hostage in their own homes under mandatory quarantine. So when do we get the people freed? Bring back Moses. Maybe now's the time to watch the 10 Commandments again. Go Charlton Heston. Anyway, just trying to bring a little humor to the light of situation. Now, exit strategy. Here's your start trailing percent, and sorry for going on that tangent. The scale out ratio is set at 1. You have your stop set even on partial breakout. Last conditional change. It takes every stop method, LCCs, dynamic, and compression, and kicks in at a 2 ATR event. Next, customizable exits. Stop loss. It adds 6 ticks to your stop spot. So again, here's your entry on this short right there. The stop, it added 6 ticks to the initial level, but it still paints the picture where your stop is. Look at the intended profit target on that setup right there, that short. And why did it get out here? Because it didn't hit the profit and it had a trailing stop function that kicked in. Which one? It has 3. Compression is the one that kicked in this case. As you can see, that's the yellow line, and the gray line would be the dynamics. All right, next. Look at the profit target that the buy is set, 375, but it needs a 14-period moving average of the highs in order to generate a new fresh long. As far as sells, 5.25. So this absolutely does highlight the fact that markets go down a lot farther and faster, and that optimized at 5.25. It wants to filter out a shorter term moving average, a 5-period moving average of the low. Now that makes sense. Why? Because if you have a 5-period moving average of the lows and the market closes below a moving average of the low, that is a confirmed breakdown. All right. So that's where that all comes into play. Because this is a 5-minute model, high close and low close dojis, almost every bar looks like a doji. How can you differentiate? This looks like a doji, and this is 1 o'clock in the afternoon. All of these bars look like dojis. So right now in this environment, high and low close doji on a 5-minute basis is not working. We did not activate it, but you could. And notice that the risk-reward ratios are absolutely broken down to give users the ability to create their own trade strategy. Finally, it has a 44-period holding max holding par. So if you're in a trade, 44 bars or exits end of the day. And again, that does not enter in a market order, and it has 3 bars for signal. Lastly, it does draw the lines. So again, this is for a model that is in the live trading room that is showing everybody periodic returns. Well, there aren't many because, again, this is a market that is built on an ATR that's insane. So I think as we start to see the average true range contract, we will have to modify, maintain is the better word, maintain the strategy for an ATR environment that's conducive or contraction. Rather than looking for trades to trend, you're just going to be looking to scale out of trades, and we'll tighten up those. But either way, as you can see today, kind of a choppy, narrow trading range day. It didn't really go very far. Yesterday was okay. The day before, not so good. The day before was phenomenal. And you can clearly see it's had just some unbelievable days in the marketplace. So again, in the month of March, these were, some really big days. Really, really, really big days when we had some enormous ATRs in the market. So we have other models that we've used in the past, and those are when we see the market back into a contracted ATR range, that's what we do. Now, lastly, all of our strategies in the live trading room are definitely use our volume indicator to help clients, as well as look at other functions, and which I would like to share with you, and we'll conclude this video. Once again, this is the projection screen of our live trading room. We make comments on stocks every time I have a post and I do analysis. Everything I say in that live trading room is recorded. So if someone said, "Oh, I came late to the room, what was going on?" John made a post. Oh yeah, he's talking about in the S&P, we would see a daily close below 27.52. That'll trigger a daily PPS sell signal and close below an LCC. And as you can see, today in the market, we're at 27.89. So we never got that close. We'll be back to in the analysis for tomorrow. This is the live trading room projection. What people see, this is the British pound I was sharing with you. This is the ES. Everything shows right up on this trade manager. Shows the market, the time frame, shows the position, shows what the entry price was, what the last trade price is, what the strategy P&L is, all right? So, and it tells you what time it got filled. So all of that, and just so that you know you're using the same workspace, so I'm not using strategies, some other workspace, they're all on this one workspace right there, Trade Room Algo. We have, again, gold, we have crude oil, we have SPXL, which was short, it covered as short, and the daily SPXL is currently long, which shows it right there. We have the volatility, the VXX on a 120-minute, we have a 60-minute, we have a 60-minute SPY. Again, this is the 5-minute model I just shared with you for the ES, a 15-minute model, which had a nice little trade today, and then this is the key. We also look at the spider and a breakdown of the advanced decline. We have my proprietary volume indicator. That's what I was referencing a few minutes ago. And so you can look at the trade and say, gee, the system just strategy went short on a day trade. The 15-minute went short. The momentum of volume is going down. I kind of like that trade. And at the time, the advanced decline was weakening. So you'd say, hey, we got a weakening breadth, and this is the advanced decline based on the S&P 500. And that's how we break our live trading room. And all of this comes at a very reasonable price for everybody. But anyway, with that said, if you want more information or you haven't joined our trading room, well, then give us a test drive. If you're just interested in the Algo Optimizer, I think I've just broke it down for you. And if you are a person like George and some of the other guys in the live trading room who wanted my settings, that wanted to see them, Merry Christmas, Happy belated Easter, and I'll see you guys on the next flip side. Thank you all.